Welcome to the Deep Dive. If you're tuning in for the Compass Pathways Q2 2025 call, ticker CMPS, well, you probably already know this one wasn't really about the P&L.
No, definitely no.
This is a really crucial moment for them. A pre-commercial biotech focused on KMP 360, potentially transformative for treatment-resistant depression, a really tough space.
The stakes are just incredibly high. So our mission today is to dive deep into that discussion, pull out the key insights, focusing almost entirely on clinical execution and their regulatory path. That's really what moved the needle here.
Right. Let's start with that snapshot then. Financially, okay, zero revenue, totally expected, clinical stage.
Yep, standard.
GAAP EPS, it was a slight miss, minus 0.41 cents versus estimates maybe around minus 0.37 cents, 41 cents. But honestly, that miss, almost irrelevant instantly.
Yeah, the market just completely blew past the financials. The real story dropped just before the call. They hit the primary endpoint in their first pivotal phase 3 TRD study, CMP005.
And that clinical win just dominated everything. Stock popped, 10.4% on the day? Heavy volume, too.
Exactly. July 31st. It really confirmed this cautiously bullish sentiment despite that tiny EPS miss.
Okay, but underpinning that optimism, there's a key financial anchor, right? Cash.
Absolutely critical. They reported $221.9 million in cash and equivalents as of June 30th.
And management was pretty clear on the runway.
Very clear. Expected to fund operations well into 2027. So that just removes the immediate headache of, near-term financing risk. Huge.
Okay. And where's that cash going? Resource allocation tells the story.
It does. R&D was $30.3 million for the quarter, heavily focused, as you'd expect, on phase 3 execution.
And G&A. They seem to be keeping that tight.
Yeah, $12.6 million, still reflecting that cost discipline from the 2024 reorganization. So they have the cash, and they're spending it right where it counts, getting those clinical results. Net loss for the quarter was $38.4 million.
All right, let's really unpack this clinical validation CMPS is holding now, because this is the core value, isn't it? CMP005 hit its primary endpoint with high statistical significance. The specific number grabbing headlines. A 3.6-point difference on the MADRS scale changed from baseline. That's between the 25 milligram arm and placebo at 6 weeks. Explain why 3.6 is such a big deal. It sounds technical.
Right. So MADRS, that's the Montgomery-Åsberg Depression Rating Scale, standard measure. What's fascinating is the context. Management has basically said anything over a 3-point difference is what they see as clinically meaningful and commercially viable. When talking to payers, doctors.
So they didn't just squeak by, they solidly beat that internal benchmark.
Exactly. They exceeded it significantly.
And what makes this even more impressive, they've now delivered 2 positive late-stage studies, the phase 2B and now this phase 3 in TRD.
Yeah.
Treatment-resistant depression is like a notorious failure zone for drug development. 2 wins.
That's remarkable.
It really speaks to the potential here. But, success on paper means nothing without a path to market. And this is where they seem to be getting extremely aggressive.
Aggressive how? Well, management explicitly said they're exploring options for a potential accelerated filing for CMP 360 and TRD. They actually requested a meeting with the FDA scheduled for this quarter, Q3 2025, just to discuss these CMP 005 results.
Wow. Okay. Aggressive is right. And they're even trying to speed things up more. Something about a voucher?
Yeah, the NPOV. They submitted an application for the Commissioner's National Priority Review voucher.
Isn't that highly unusual? Pushing this hard with only one of the 2 pivotal trials fully reported out, doesn't that risk kind of, overplaying their hand with the FDA?
It's definitely unusual, but I think it reflects their conviction in this data. And the NPRV, look, it's a huge commercial lever. If they get it, it shrinks the review time from maybe 10 months down to 6.
And they can sell it, right, if they don't use it.
Exactly, for potentially hundreds of millions. Oh. Their confidence seems to stem from their existing breakthrough designation. That means they already have really good, consistent engagement with the FDA's psychiatry division. They have the agency's ear, and they're clearly leveraging that.
Okay. Let's quickly touch on the rest of the pipeline. Updates on the second phase 3, CMP006, and the expansion areas.
Right. So CMP006, that's the second pivotal TRD trial, the one allowing a second dose if needed. That's still recruiting well. They confirmed 26-week data is still expected in the second half of 2026. That's key for durability, even if they get an accelerated filing off CMP005.
Makes sense. And expansions beyond TRD.
They're finalizing the design for the PTSD late-stage program. building on some earlier signals they saw there for rapid, durable benefit.
And anorexia. There was a small study there.
Yes, phase 2 in anorexia nervosa, very high-risk group. They reported an encouraging efficacy signal reduction in eating disorder and depressive symptoms out to 12 weeks. But they were careful. Statistical power was limited, small numbers, and importantly, high dropouts in the control arm. So encouraging, but early days.
Safety is obviously paramount here, especially with psychoactive compounds in these patient groups. What did the DSMB, the safety board, say?
Really crucial update there. The DSMB reported no unexpected safety findings across both phase 3 TRD trials. So that includes the ongoing COMP006.
Okay, that's good.
And critically, no meaningful imbalance in suicidality between the drug and placebo arms. Management was quite careful to clarify, yes, they observed suicidality, but it seems linked to the underlying depression itself, which is high risk, not the drug specifically. That's a vital distinction.
And that held even in the anorexia study, which you said was extremely high risk.
Correct. In that small anorexia study, yes, higher overall rates of suicidality were seen in both arms, again, reflecting the severity of the illness itself. But crucially, no imbalance between the COP360 arm and placebo. That consistency is a really strong safety signal for the whole program.
Okay, moving from safety data to getting ready for market, commercial prep. They made a pretty big move adding Justin Gover to the board, former GW Pharma CEO.
Yeah, that's a massive signal of commercial intent. Just huge.
Why him specifically?
Gover's basically architected the successful launch of Epidiolex. Having him on board signals a very clear shift towards launch readiness, payer strategy, market access.
Sure.
Particularly if they do get that accelerated approval they're gunning for.
And management seemed to be really leaning into the potential commercial advantages over existing treatments like Spravato.
They spent quite a bit of time on that, pointing out their single administration, sustained out to 6 weeks, achieved a comparable effect size to Spravato's pivotal trials.
Which required 8 administrations.
8 administrations. That difference, it just completely shifts the potential economics for providers.
Doesn't that single dose still require, like, hours of supervision? Isn't that a massive administrative burden that clinics and payers might balk at? Seems like a hurdle.
That's the key question, right? Management addressed it directly. They noted the existing U.S. mental health infrastructure, specifically I think it was 6,000 centers currently delivering Spravato, is largely ready. They often use individual rooms already, suitable for that kind of supervision duration.
Ah, okay, so the infrastructure might already be there.
And there are existing CPT-3 codes. Those are billing codes for novel services. They allow for hourly reimbursement regardless of exactly how long the administration takes. That simplifies things for the provider, potentially reducing that friction point you mentioned.
Good. Okay, so connecting all this back to the investment picture.
Yeah.
The company's clearly trying to pivot from just clinical results to a real registration story. But where's the investor debate right now? Where's the skepticism?
Well, despite the clinical wins, market skepticism is definitely still there. You see it in the volatility. Investors are wrestling with, I'd say, 3 key unknowns. 1, the regulatory path accelerated or standard. 2, the actual commercial timeline. And 3, the real-world durability beyond 6 months.
So the immediate focus is all on the FDA.
Pretty much. The near-term catalysts are entirely centered on what comes out of those Q3 FDA talks about accelerated filing, and then just the operational milestones for COMP006 ticking along.
We mentioned the stock pop on the data, but context is important. It was up over 10% last month, outperforming the biotech sector, the XBI index.
Right. Beat the XBI over 3 months, too, by about 9.7%.
But still down 26% over the last year. That huge gap. Clinical success here, stock performance lagging over the year. It really highlights that lack of full market conviction, doesn't it?
Absolutely. Which leads us nicely into our final segment. It raises an interesting question. If you were pitching this, say, in a theoretical hedge fund scenario, using just this earnings call data, what's the outrageous but maybe plausible trade idea?
Okay, let's be absolutely crystal clear here. This is purely theoretical, not financial advice for you listening.
Okay.
Go on, what's the pitch?
The pitch is this. The core commercial argument isn't just efficacy. It's the potentially massive difference in patient convenience and, importantly, the administrative load compared to Spravato.
A single dose versus 8 doses.
Exactly. Given how aggressively management is pushing for accelerated filing the NPRV try, the Q3 FDA meeting request, and those direct Spravato comparisons they made, the market, I think, is still seriously underweighting the regulatory optimism here.
Okay, so the trade. High risk, directional bet.
It'd have to be something like a short-dated, highly directional, bullish call option trade. You'd be targeting a positive, clear announcement on the regulatory path coming out of that Q3 FDA meeting.
Pure catalyst speculation.
Pure catalyst spec. Leveraging that big gap we just talked about, the 2-for-2 late-stage wins versus the 1-year stock lag. The thesis is simple. Adding giver signals, serious... It's too strong for the FDA to just ignore for accelerated consideration.
Betting big on regulatory speed and conviction. Definitely a high-stakes move.
No doubt. Risk is absolutely high, but it's that potential upside locked into that single regulatory catalyst that you'd be theoretically buying.
Okay, so to wrap up the key takeaways for you listening, CMPS has clear, validated clinical momentum in TRD now with CMP 005. They've got a solid cash runway into 2027, and they are pursuing a, well, hyper-aggressive regulatory strategy, leveraging those 2 positive studies and their FDA relationship.
Yeah, they successfully de-risked the clinical execution part this quarter, you could argue. But the next big chapter, the next multi-year arc, it really depends entirely on translating those clinical wins into a credible regulatory path and, crucially, a sustainable payer coverage strategy.
Right.
The question really shifts now from does the drug work to will the clinical durability they've shown actually translate into commercial durability when insurers start footing the bill? That's the big question mark going forward.
A fantastic pivot point to keep tracking over the next few quarters. Thank you for joining us for this deep dive into Compass Pathways' latest developments.